What's up, world? It's Nate, and I am here to do another Monday market update. Kind of where I want to go today is I want to zoom out from just looking at Tulsa. I don't know if you ever take GPS and don't just look at exactly where it tells you to go, but try to kind of squeeze the screen down, zoom out, look a little higher up in the sky, so to speak, and look at the big picture where you're going. Well, I hope to do a little bit of that by not just looking at our local market, but looking across the country. So let's jump right in, shall we? As they say, real estate is local. No argument there, but it's influenced by national factors. There you have it. There's two big things that do influence the real estate market locally and across the country. This is inflation and interest rates. So I'm saying inflation greater than interest just to make a little bit of a point that inflation is actually the thing driving the interest rates that we're seeing. And interest rates are going up. When they do go up, they don't just go up necessarily just in a specific town, city, or state. They go up across the country. So across the country this last year, now this is a report I pulled from the National Association of Realtors. So year over year, prices went up year over year, 2.3%. And yes, this was December of 2022. So this is in the rising interest rate environment that we've been in. And the national median sales price jumped up to 366. Tulsa, we're just under that in the high 200s, depending on which day you look at, but usually it's in the high 200s, no matter which report you pull. So the national closed volume. Now, this is, I make the distinction between the price and the volume because a lot of times this is just said national sales or sales statistics. And I like to kind of pick it apart and get granular for a second and say which one's which, because this is the amount of transactions that have happened. So it doesn't, this is a big drop. But we're not talking about the dollar amount that it sold for. We're talking about how many transactions happened or the volume of transactions. So that did drop. So there was a big decrease there. Inventory across the country is up from 1.7 months to 2.9 months. So this is interesting to me. This talks about the absorption rate. And so if the absorption rate is getting a little bit slower, meaning people are buying at a slower pace, the days on market for listings is ticking up. Um, and yet in the middle of that, our prices are going up, go figure. But with supply going up like this, some would point towards some kind of a crash. Now, we're not necessarily at a point at all right now where this is historically high. I mean, we've seen 3 months, 4 months, 5, 6 months in the history of the real estate market. So 2.9 months does not mean we are absurdly high. It just means that things are up a little bit and moving just a little bit slower. So that's a look at the past. If we go into the future, let's take a look at the forecast. And I'm going to say what the forecast looks like per NAR, just because a lot of this I did pull from the NAR research. At the end of this, I'm going to have a couple other quotes and stuff I pulled from other places too. Okay, so the new normal for mortgage rates will be probably between 5.5 and 6.5%. That's from Lawrence Yun, NAR chief economist. He used the phrase likely. I said probably, but I love his phrase here, the new normal. This idea of a new normal is a great phrase. I might make it my phrase for the year because we're all just trying to acclimate and adjust to what is this marketplace right now and what is real estate doing right now. So as we do that, um, kind of having a healthy expectation of a 5.5 to 6.5% range. Personally, I'll take that. You know, we did see that peak at 7%, not that far back, and we've seen a decline since then. So 5.5 to 6.5, personally, I will take that and just adjust to the new normal, and I suggest everyone else do the same. Okay, now this is a different quote that I pulled. This is from the let me adjust where I am, if you can just bear with me here. Um, let me think about this here. I'm going to make myself bigger. So yeah, Joel Kahn from the MBA, which is the Mortgage Bankers Association, the VP and the deputy chief economist there. He said if rates continue to fall and home prices cool further, we expect to see potential buyers come back into the market. So that's fair. That's a fair expectation. And I am seeing aspects of that locally, and I believe that the data is pointing to that happening across the country as well. So I'm going to shift gears from interest rates and go back to what I talked about earlier on with inflation, because inflation and interest rates, they're kind of like cousins right now. Or they're like brothers that are fighting each other and they're supposed to cooperate, and we're trying to get them to cooperate or something like that. So uh, we have seen now there's some new reports out there on the subject specifically about inflation, and I didn't want to pull data from everywhere on everything, so I left that out. But there was actually some drops in the rate of inflation. So inflation, of course, means things cost more every year, and those numbers were like approaching double digits. That number has gone down from just this thing that they called peak inflation, where I mean, like 7% rates. So that percentage of inflation has started to cool down. There was an interesting article at Forbes.com, and I pulled this quote from it from Chuck Jones, one of their contributors. He said that the Fed could at least come close to its goal of 2% inflation by mid 2023. Super interesting to me because they were basically talking about the next 6 months in 2023 that we can expect to see every month the rate of inflation go down a little bit. So personally, this is something I haven't really ever studied this intensely before, but I plan to research that further and pay attention to that every month, because I believe that's going to be our correlation as we go into this year with what interest rates do and us kind of finding that new normal that I talked about. So, as always, I hope you guys get some value from this. I hope this helps you make heads or tails of what the real estate market is doing locally in your market, in my market, or wherever you're at. If you're watching somewhere else, please give me a comment. Please like this. Please share it with someone that you think might find it valuable. Go ahead, do what they do. They talk about hitting that subscribe button. If you want to do that, that'd be great. But do give me some feedback if you like this, if you don't like something about it, if there's something you do want me to talk about. Um, this is content I am going to put out there consistently in a longer type fashion like this. So I take a little bit of time, put a little thought into this, and I hope that it helps you. So do give me some feedback if you could. Thank you so much for watching, and I will see you next time.